Consistent with the theme of the conference, Nabil asked me to speak regarding the view from a technology provider. And so our focus is around technology with a specific emphasis around the underbanked consumer. But when we think of mobile payments, we think of mobile payments as part of mobile wallets. So if I may, let me give you a little background to how we define a mobile wallet. Specifically, we think of a mobile wallet as a repository for payments and financial instruments. So most of you have a wallet in your coat or a purse, and inside that wallet you have credit cards and or debit cards. So the credit or the value on those cards is stored on a piece of plastic. For us, we think of a mobile wallet as storing that same credit and same value on a mobile phone. So with that as background in terms of how we define a mobile wallet, let's talk about mobile wallet functionality. Mobile wallets provide the consumers with access to a variety of financial service transactions that are offered by traditional institutions as well as alternative service providers. The mobile wallet can meet the needs of the underbanked as well as the banked consumers, and it provides an ability for a consumer to perform transactions remotely as opposed to in an in-service or a brick-and-mortar location. So some of the markets we serve, for example, where you may have an agricultural worker who has to make a bill payment for the utility that services his or her home. That individual makes arrangements to get time off of work, takes public transportation, has to get cash the night before, and pay their utility bill. By providing a mobile wallet or the ability to make a bill payment with a mobile device, that individual not only avoids the convenience of the cash and saves having to get an hour off of work to pay his or her bill. Additional functionality, the traditional things that you've heard discussed during this conference. Mobile wallets can facilitate deposits and withdrawals, a variety of money transfers, point-of-sale activity, mobile bill payments, direct payroll deposits, and very interestingly, a form of a direct loan to the consumer. So when you think about mobile financial services or an MFS program, as a technology provider, we try to be very cognizant of what our customers are looking to do with an MFS program. And one of the primary objectives that we see in mobile wallets and MFS programs is driving revenue by utilizing principally 3 service providers, and they, in essence, become the owners of the program that you have to address to have a successful integration. The mobile network operator being the obvious one to leverage their mobile customer relationships. The banks, the smaller financial institutions that want to rent time on that MNO network so that they can connect their customers via a mobile phone. And finally, the most interesting category that we've seen is the non-MNO or the non-bank, such as retailers, who want to take that mobile wallet as an owner, and they can become the primary source of getting customers and retaining those customers to use a mobile device. So as a technology provider, we try to facilitate the integration of financial services among these owners to be implemented on a mobile phone. Another important characteristic for a technology provider is to understand the difference between mobile financial service programs and mobile banking. And to us, we've seen over the years that this is principally that an MFS program is going to drive revenue as opposed to a mobile banking program which is going to retain customers. So when you think of M-banking, it's typically driven almost 100% by the major financial institutions that support it. A savvy mobile customer who's familiar with M-banking services will utilize the M-banking service as it's offered by their financial institution. The M-banking apps are usually found in a lot of the high-end smartphone devices, and it really is an extension of the web portal that the banks use to provide services to their customers. So in conclusion, we see M-banking as really a strategic effort by the banks to retain their customers, and it's really not intended to drive incremental revenue. However, when you look at the MFS programs, the owners of these programs are clearly driving revenue. And so with an MFS program, these owners want to make sure that that mobile wallet, again, is a repository for their customers who become subscribers for financial accounts. Most of these MFS programs are oriented toward the underbanked consumer. So as you've seen from some of the earlier comments this morning, this underbanked population, we think, is clearly the biggest target market for mobile banking, for mobile wallets and mobile financial services. Not only is it going to be a lower cost to the consumer, but it also will be more convenient. So when you think about the size and the scale of this underbanked consumer and why it's so attractive, we define this underbanked customer to typically have a demographic where if they do have a checking or savings account, it's not very often used, and the consumer typically wants to go to non-bank services. We also see in most cases that this demographic profile doesn't even have a checking account or a saving account, and they really don't have access to any kind of formal credit. So how does the world's population develop such a growing and a big demographic in terms of underbanked? It's for a variety of reasons, whether it's a lack of income or a financial wherewithal. They just have poor credit scores. They're in remote locations and they're not conveniently located to brick and mortar, or they just simply do not have comfort with utilizing financial institutions. Additionally, when you look at the demographics of the underbanked, it's just billions of consumers worldwide. You've probably all seen a variety of financial data and reports that show the size of this market, but some of the more recent data shows that over 2.5 billion adults who are 15 years or older meet the definition of an underbanked consumer. Almost 2/3 of these consumer demographics are in Africa, Asia, and Latin America. In the United States, we have over 100 million underbanked consumers, and it represents over 1/3 of our total population. So a staggering economy in itself, with some estimates of over $13 billion through more than 300 million various financial service transactions. This chart focuses on some of the international characteristics of an underbanked consumer. You see the blue or purplish bars showing the total number of adults in some of these various foreign markets. The red line shows the percentage of those adults that fit the underbanked demographic definition, and with the exception of one, almost all of those are more than 50% of the total population being an underbanked consumer. So with that kind of demographic in terms of where we are today, when we think about the future of the underbanked consumer, a variety of the financial analysts and the material that we receive from Wall Street has always taught us that the underbanked consumer segment, at least in this country, is expected to grow at a rate that's even faster than the total population of this country. A variety of contributing factors, including immigration and lower credit scores and characteristics around, ethnicity, in summary, just suggests that the number of underbanked consumers are going to continue to grow. And interestingly enough, we're seeing a continuing trend around the major financial institutions and mainstream financial services company that continue to pull back from providing the underbanked consumer with financial services. One final slide around mobile phone subscriptions. And when you look at developing markets, the principal focus for the underbanked consumer, you see the circle on the far left is in the year 2000, with the red portion of that circle representing about 1/3 of over 700 million subscriptions being in the developing country or an underbanked target. To the far right, 2010, you saw a statistic earlier. We have over 5 billion phone subscriptions, and now we have almost 75% of those subscriptions in developing markets. So with this as background, as a technology provider, we try to focus on what kind of technology alternatives can we bring to our customers worldwide to demonstrate how to integrate a mobile wallet into a mobile phone. And without getting into too much technical explanations this morning, I wanted to walk you through the four principal platforms that we utilize with our customers. The first one being USSD, where a consumer can access a mobile wallet by using a pre-programmed phone number that's already on their mobile phone. Phone numbers can provide the command to the carrier or the MNO. The MNO will interpret this command, sends the actual menu of financial services to the phone, and then the consumer can execute a transaction by looking at that menu. One of the things that's always important in technology integration is to look at whether or not the mobile wallet provider has to have an agreement with the carrier, and in this case he obviously does, but a data plan is not required by the consumer with the carrier. And one of the interesting characteristics of USSD is that it's generally accessible for mobile wallets regardless of the type or the quality of the phone, which is a very important consideration in some of the underbanked markets. The second technology, the mobile browser, or commonly referred to as WAP 2.0. In this particular technology, the consumer uses the web browser on his or her mobile phone and logs into the online portal. Consumers can access their mobile wallet and execute any of the available transactions that appear on the screen. And in this particular technology, it does also require the consumer to have a data plan, and he has to obviously access the mobile web on their device. The usability with WAP 2.0 really does vary with the quality of the phone, which is an important consideration. So, for example, if you look at Safari on an iPhone, it's typically a very highly usable functionality. But if you're looking at a browser to be used on some of the older prepaid phones, sometimes referred to as candy bar phones, then usability is not quite as available.